The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, it's nice to see that the world is back to normal, thanks to Vladimir Putin and his vaccine. And if you boys and girls believe that stuff, I really have 3 more shares of the Brooklyn Bridge for you, so just be patient, and I'll print these out and get them out to you as soon as possible. The first 2 charts we look at, of course, are the DAX and the FTSE, and as you can see here, they had beautiful bearish patterns, and then when Putin's announcement came out to save the world, the Dow jumped up 350 points. It was followed by the DAX and the FTSE. And it's that's how people react to the news, and that's why you got to protect yourself these days, because we live in interesting times. Let's take a quick look at the Treasury bonds here, folks. We'll get this up here. This is what we were looking at up here. You'll see here that we had some really strong resistance up there at that 183 level. But what we want to do now is we've had a nice 2-day correction in a very strong bull market. So we'll take a look at these Treasury bonds on an hourly chart, and you're going to see something quite interesting, and that is you're getting really close to that 61% retracement down there at 179.20. 23, 29, somewhere in there. If you look closely at that Treasury bond since August the 6th, here we are into the 11th, you'll notice that it's a perfect ABCD pattern. I didn't draw it in because I didn't want it to be too cluttered, but you'll see the 3 drive to a top up there at that resistance level that it hit several times. And so this is coming into some really strong support, and it is still a bull market, folks. So, you got to remember that. I mean, maybe that it can go through there like melted butter, but if you see 179.03, you'll know that something is seriously wrong, and this top is, much by. We're almost 4 handles down in 5 days, so that's a pretty big correction in the Treasury bonds. So keep that in mind. By the way, our guest today will be Tim Bost. And I think that'll be something that we always enjoy listening to Tim. I wanted to reiterate what we were talking about yesterday in the gold market. If you remember here, we were highly suggestive that there was a possibility that we'd made this pretty good top here in the gold market. I'll show you the ABCD pattern in just a moment. And we would say, watch that 382 retracement there at 2050. Now, it went up to the 50% level at 2057, but I want to show you the pattern because here again, we did the same thing in Treasury bonds that we're doing, we're doing the same thing in gold like we did in Treasury bonds. And I just wanted to walk you through what this looks like. So let's just complete where we were here so you can see everything. You'll get this up here. You'll be able, there's your ABCD pattern up there at 2090. We've now come down $130. That's 4 harmonic numbers, and it stopped exactly at the 78% level, folks, so far this morning at 1961. Going below 1961 is so bearish, I don't even want to talk about it. And also the same thing in silver. We've dropped $3 an ounce in silver coming in also at the same time. But these markets, if they're good, they're going to rally. This is about all you're going to get, a three-day correction, and these are wild times. So a lot of support at the 1961, 62 level. Below that, not good. And below 26.95 in the September silver is also not good. What are you saying below it now? I can't see the prices. Terry, would you update me, please? Are we below the 61 already? I don't think we are, but if we are, then I have because I bought it. Gold. All right, let me do time out, boys and girls. I got to check this because I do have something that I'm watching here. Yep, we did. We went through it. Wow, this is really negative in gold now, folks. This is we're 1952. We're really breaking hard. Boy, oh boy, what a smart one! I bought that stuff. I bought it at 62, and then I put my stop at break even after we got up to 72. But they haven't come back with the fill yet. Shut the front door. Wow, this is. Let's take a quick look at this gold here because we've done so. Oh my goodness, look at this. Let's just get this up here and show you where we are. So we'll be able to take a quick look to see where the next support might be. Hold on, boys and girls. Give me a second here. This is, boy, thank God for stops. Hold on just a second here and get this up here, and you'll be able to see it here. Okay, there's your big ABCD up there, 2090. The 382 comes in at 1936, folks. 1936 and 1940. That's going to be we go below that. Woo, that's not good at all. So remind ourselves that these markets can go a lot farther in either direction. So let me put my beeper on, and then we will get back to this one right here. Hold on just a second. All righty, and let's move on to the next one here. The other one, of course, you folks realize that the U.S. dollar has turned, to the downside, turned up finally. Euro and the pound and all these others should be moving to the downside also. So we'll look at it. Now we're really close. We're at 79.20. We've hit in the Treasury bonds. That is very close to the number that we're looking at. So keep an eye on these in the next hour because if it's good, they should be bottoming right after the open, and then we should have a pretty good move to the upside in the Treasury bonds. The gold, we're 1949 now, folks. The 1940 is the 382 on that. So, boy, below that, we've made a major top in gold. That's all I can say. But that was good. That was important support in the gold, and it was just perfect too. So when it breaks below that 1961, boy, that's telling you that something is right. Oh, there's finally got to me. Okay, all right. Let's thank you for heads up on that. I really appreciate it. So let's take another one. About this Putin stuff, folks. I really believe most of the stuff is cannon fodder for these guys. But let's move on. I wanted to do a couple things here before we get to Tim. One of them I wanted to mention is this New Zealand dollar. I don't trade it very often, but it is, the seventh cross rate of the big ones. If you take a look at it, it is the same type of pattern as the bonds with massive resistance. There's a 135 pattern, a 618, a 786 up there at that 166 level. At 66 level. And I think as long as it doesn't get above 68, that looks like this thing could have a heck of a correction. There's a nice ABCD here between April and August also that's in there. So watch that New Zealand dollar, folks. If you trade the foreign exchange, that could really be a big move because we went from 54 up to 67. And now we're trading at 66.50. So keep an eye on that. That looks like it's going to be interesting. So, folks, I know, the way the news is talking, the way the stock market's acting, it's acting like this virus thing is over. That's mainly a function of the news, folks. They come in and they pump the news, all the stuff. Now, when we get back, I'm going to show you what I did during the early 60s and 70s to make a couple of bucks. 877-926-92. I give up. I've got the allergies, folks. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I've posted a chart of how I got interested in these technical stuff and through the years, but that's the early 60s, 1960s through the 1980s. But basically, what I'm looking at here is an hourly chart on the NASDAQ. Now, remember, we didn't get hourly charts and stuff like that way back in the 60s. I'm talking 66 through way into 1983 when we start to get really good data from some of these things like oh my goodness, CompuTrack and other places were giving the data out pretty good. But you notice this is nothing more. Just imagine like this was the chart. Figure it's a daily, but I would get this chart on a Saturday by Commodity Perspectives, okay? And the next thing I would do is I would go in and I would measure the cycles. And if you look at the bottom that's down here, back in May, I was looking for a bottom to come here into, late May. As you can see here, I just marked those off, and then I would draw the lines in. And because I was a fan of Jim Hurst and his profits, this was before the book actually came out, but high translation, you'll notice that the high in the cycle came on the right side of the crest. That's very, very bullish. That's known as high translation. That's one of the things in that book, Profit Magic of Stock Transaction. It is spot on. Some of the other things have been proved wrong, like synchronicity and some of the other things, because there's astrology comes in here, which I don't want to get into. But I would start to mark those cycles. So that would tell me that I want to get ready to be a buyer down there. I didn't know anything about full moons. I didn't know anything about new moons, anything like that, nothing at all. So the next thing I would do is, you'll see here is how I entered the markets during that time, is that I would wait for the cycle crest to come in, and then when the bottom came in, I would draw a valid trend line from those highs. You can see I didn't even know Fibonacci then. I didn't get Fibonacci till 1970. I'm talking about 68, 67, 69, 70, and it wasn't until April of 70 that John Hill showed me the Fibonacci relation. So that's what I would watch, is those valid trend lines. When those valid trend lines broke, I would look to be a buyer. Now, if you notice that first trend line, you see how it breaks above the trend line and it pulls back one more time to a 61% retracement? Well, that was a signal that was given by an oral surgeon up in San Francisco to Walt Bressert, who was doing his Hal commodity cycles, and that was known as a Lindahl wiggle. His name was Gary Lindahl, and that's a very, very good, very good signal if you use something like that when it traces to those trend lines. Okay, the next one we want to take a look at is the fourth one, and this is the one. I'm going to do another example of that valid trend line so you'll be able to see it. I don't know if this will help you or not, but we'll see what's going on. Anyway, that's what you'll see here. We have the first one. The second one was the same thing. This one didn't quite. You can see the pullback at the 61% retracement, then away it went. And you'll notice the valid trend line break on the downside. Okay, that's an important thing because that has told you that market is broken. And what does it do? It comes down to major support at the 78% level. So those are some of the things that I used, and I'll get another one up here. This is what it looks like here, updated. I'm just going to show you. This is what I was doing, and I just give you. It's not rocket science, but it sure does work. So those are one more, and then I think I have one more here. And then I'll answer the question that someone's been asking me, 5 and 6. I think this is it. Yeah, that's it. Let's do the last one here and get it up here so you can see it. But that's all I did right out of the book, and I just used the valid trend line concept, and that means that market rallies back to either 50%, 382, and turns. If those of you that listen to the or get the newsletter 24/7, Trade What You See. We focused on that NASDAQ coming down to the 382. We did that yesterday. I know it's hard to believe with the Dow up 300 points yesterday. The NASDAQ was down 140. And remember, we mentioned the importance of the Facebook, the fact that it looked very, very negative. And I think that one has lined up pretty good. The Treasury bonds have lined up pretty good. The dollar index has lined up pretty good. So we're just waiting to see if the stock market is going to roll over. But we need to see if that gold is going to hold the 1941 level. And that would be down, wow, that would be down $180 in a couple of days. But that's the way it's going, folks. These are big swings. And if you don't have a big paddle to get into that kayak, you've got to be very, very careful. Because this top in gold might have been the top. So we don't know if that's going to be the top or not. But we'll find out over the next few days. Because if we break below this 382 level at 1941, that's going to tell us that, something's wrong. And we already see the wide-ranging bar. The wide-ranging bar is very important. It tells you that you had a lot of people up there were bullish. We were suggesting the fact that the open interest had been dropping for 6 straight days in the gold market, so there was no new buying coming in. So it doesn't take much for the thing to turn over. But, that's my 2 cents worth. The silver, I like the silver. I mentioned to you this morning, I said I thought the silver would be pretty interesting. I posted a little thing on the silver, and we'll see if that does anything. And I like the bonds, too. I like the bonds down there at 1920. 179.20, folks. Here in Arizona, we have a tree called the Palo Verde. It is absolutely beautiful, and it is in bloom, and it stays in bloom all the way through the summer. And I am affected by it about 3 days a month, and these are the 3 days. For some reason, around in the middle of the month, these trees just hit me, and I have to take a allergy medicine, and I don't like to take medicine, but that's neither here nor there. But I feel great. It's just it might sound like having a little trouble, but I am doing all right. So we'll move on to the next one here. Let's get back here. Remember, I want to talk about this gold because this is a good. I don't know where the good buying opportunity is going to come in, folks. You might have to try it several times, like I did this morning. I mean, had a beautiful pattern there set up at the. At 1962 level in the gold. It held up perfectly. It rallied up to 1974, and in a matter of 5 minutes, it's back down through there. And boy, you don't want it after you've had a $12 profit. So that tells you. Now let's remember I believe that we're in the same session now as we were way back, and I could be wrong, like we were in 1978. I think we're going to have a really strong break here in the gold. Hopefully, I'd like to see it break for a whole month, and the lower the better. But then when it gets down there and nobody wants it anymore, then that's where it's going to go. Because in 1978, after we had that 1 month break and you couldn't get anybody looking at it, then that's the thing that really makes it exciting. So those are the things that I'm watching here this morning. Whether they mean too much or not, I don't know. But I don't believe we've got someone from Santa Fe, New Mexico. We'll be right back. Oh,
okay, man. Thank you.
Thank you, Jake. Yeah, stay with us, Jake.
Okay.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And before we bring on Tim Bost, we have Jake from New Mexico on the line. What can we help you with, my friend?
Well, there's two things. One is very interesting. This morning around 5 o'clock, 4 o'clock actually, the NASDAQ futures were up like 55 points. And I wake up at 9 o'clock, and I'm like, what happened? Do you know what happened? I mean,
yes.
the Dow is still up strong, but
I certainly
the NASDAQ
do.
sure ain't.
I know what happened, Jake.
Talk to me, please.
There was more sellers than buyers.
I love you.
That's it. Hey, that's all. That's all.
I love you. Let me ask you then.
Yes, sir. Go ahead.
The IWM, the Russell, it just keeps going up and up and up. It's got Viagra stupendously going on here. Where do you see IWM taking a break and maybe heading back?
Well, we've been up 6 days in a row. The statistics say you should stop after 5 to 8 days, and so if there's going to be a correction, it should happen between now and Friday. It would be my guess.
I was thinking the same thing. I actually was. I really was.
And
it's just amazing how they say rotation, but that comes to a point where rotation is going to run out of rotation.
Well, it's more like Putin this morning, but who knows what that gentleman has on his mind. But anyway, that's what I would be watching, is for correction starting somewhere between today and probably Thursday.
Thank you, Larry. You're a good man. Take care.
Hey,
stay well. Stay healthy.
I don't know about that, but thanks for calling in, Jake. We appreciate it.
Okay, my pleasure. Enjoy your show.
You bet. Timothy Bost, are you there?
I am indeed, and you are a good man. I will agree with Jake.
Oh, I'd like you guys. I'll send the checks out just as soon as possible.
Good. We're waiting for them.
What are we looking at for Financial Cycles Weekly today? You want to go ahead and take the mic?
Sure. Yeah, we've got a chart here that we generated this past weekend, so it's still fairly fresh off the presses here. What we were working with was looking at composite cycles for the S&P, and we combined the top 40 cycles that we could find to get a picture of what was going on with trends. Of course, the black line on the chart is the daily closes for the S&P through last Friday. Yesterday is excluded here. And the red line is our cycle projections. And what we like to do then is look for the major inflection points in the cycles and see what correlates with that astrologically. So this is the basis of our work here. We look for multiple confirmations from cycle studies as well as the astrodynamics. And so the first part, this is the historical part of the chart here. We saw, of course, the big pullback beginning mid-February right on the Mercury retrograde station that occurred. And then that's point A there, declining into the vernal equinox at point B and toward the end of March there, and then a move back to the upside, which culminated at the lunar eclipse around the 5th of June. And since that time, we've had a little bit of a downward bias into that Venus direct station that came up on June 25th, and the move in the market was the same. The amplitude of the move did not coincide with our cycle projections there. But since that point, the cycle projection has held up pretty strongly. So we're interested in, obviously, what comes next with all of this. And here we're looking currently here at point D with that was here with that dynamic at the end of June, and we, of course, have gone up a bit since then. So we're looking next at the Virgo ingress, which comes on the 19th of August. So that'll be next week around this time that we're looking for a slight downward inflection in the markets. Then as we get into September, essentially the cycle projections suggest a congested trading activity. And we're looking for a little bit of an upside bias there through September, but congestion seems to be the name of the game as we go through that month. The next big point coming up is on September 29th, point labeled F there, which is Saturn making a direct station. We're looking at that as an intermediate trading top on the 29th of September. And of course, as we do these projections out months ahead of time, they're subject to revision, but we like to get a picture, at least based on our models, as to what's coming up next. Now we've got that Saturn point at point F, and we're expecting a short-term turn to the downside then between the 29th of September and point G, which is the Pluto station. That's coming up on the 4th of October. Now, this is going to be kind of a little fake-out move there back to the upside is what we're anticipating as we begin the trading in October. And then we have a very, very interesting phenomenon coming up as on the back side of that, which is point H in our chart, which is a triple retrograde. This is occurring between October 10th and 13th. This is what we're really interested in focusing on right now because we believe that this can be a significant turning point in the markets and the potentially a significant move to the downside hitting right about that point.
Wow, that's really interesting. Those are pretty much spot-on numbers, too, that you're looking at, aren't you?
Well, we're looking at this in particular now as we talk about a triple retrograde, and this is not kind of a standard term. I made this one up, but simply because we have 3 retrograde stations occurring in rapid-fire sequence there. The first one will come on October the 10th, which is a Saturday. The markets will be closed. We have Hades, the trans-Neptunian factor, Hades, making a retrograde station that day. Then it's followed on Monday, the 12th of October, with a Chronos retrograde, and then October 13th, the Mercury retrograde station coming in there. So the combination of the 3 is what suggests to me that we're anticipating a high probability of a downturn. Now, this is based on our back testing here as well. This is what Hades stations typically look like in terms of the S&P movement. That 0 point in the middle is the date of the Hades station, and then typically we see a pretty significant downturn for about 2 weeks following that. So based on that historical precedent, this is the average of all the Hades stations we've been able to research with the S&P. So it's high probability of a move to the downside following just that one phenomenon. And as we look at the Chronos station, we get the same kind of directional move, but actually Chronos kicks in with some bearish influence about 3 weeks prior to its station, which in this case would be mid-September. So we're seeing a little bit of a significant downward pressure there through the last half of September, according to this model, but certainly extending through the middle of October and well past that toward the end of the month based on the Chronos station. Now, the Mercury stations, retrograde stations, don't tend to be quite as severe, but again, typically what happens, even though there's a period of trading congestion around Mercury stations, we do tend to see a trend to the downside for about 10 calendar days here.
Okay, Tim, will you stay with us? We have a question after the break. We'll be back with Tim Boss, Financial Cycles Weekly, folks.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
All right, folks, we're back, and we are talking with Tim Boss, Financial Cycles Weekly. We have a question from Mr. Z in our Tiger Den, and the question is, have you researched these triple retrograde phenomenons in the past?
Well, we've looked at retrograde phenomena a great deal in the past, and we regularly track what we call planetary stations. Those are the times that planets begin retrograde motion or end that retrograde motion and go back into direct motion. These tend to be pretty significant in terms of the markets in general, simply because of the analogy, if you will, of a planet changing direction. Sometimes the market will change direction along with that. What is rare here is the fact that we have 3 retrograde stations within a 4-day period. And so that's why we're flagging this as a triple retrograde. I've not done research to find out how many times exactly this has occurred before, but what we're really looking at is this cumulative effect of these 3 independent phenomena, each one having a bearish bias when it has happened in the past, and they're coming in rapid fire succession within that 4-day period. The first during a weekend, and the following 2 on the first 2 days of the trading week here on October 12th and 13th, which is why we've identified that period as having a high potential for being a pretty significant inflection point. We're anticipating a downward move in the markets hitting around that time frame. And in terms of this triple effect, that's what caught our attention. And so we're trying to be a pioneer here. Let's put it that way in terms of the research.
Well, good response. Good response. Okay, you want to go ahead and continue, please?
Well, just in looking at these phenomena, Larry, what we're concerned about here is being able to come up with identifications of the key planetary phenomena that can impact the markets overall. And so what we're doing here is we will often look at a particular phenomenon coming up, a Mercury retrograde station or a solar eclipse, whatever it may be. We do our back testing on that basis and then try to draw our conclusions about market dynamics based on that back testing. And oftentimes that's a very, very reliable way of coming up with good forecasts. In this particular example, what we have done here, however, is combine this with the cycles research as well. So we're always interested in finding confirming factors and getting a more fine-tuned forecast as a result. Now, there's a little bit of what we might call astrological form fitting going on here, because we do the composite cycle work and look for those inflection points historically, here going back to the first of the year of the chart that we showed earlier. And then what we're looking at is what planetary phenomena have occurred at those times that make sense as potential triggers for turning points in the markets. And what we saw back in the middle of February was that big downturn in the markets. Now, there were lots of fundamental factors at work. Obviously, the spread of the coronavirus and economic factors connected with that that precipitated that downturn. But the fact is, it happened on a Mercury retrograde station. And so what we have coming up here on October 13th is another Mercury retrograde station. And then along with that, we have the combination of the trans-Neptunian factors making retrograde stations as well, Hades and Kronos. And so this is what gives us the idea that this could have a combined effect, this triple retrograde phenomenon that could be very, very significant and potentially triggering a major downturn in the markets at that point.
Wow, that's really interesting. I'll tell you, it always amazes me that when these things work, boy, they're just absolutely spot on. Tim,
we risk being spot on 2 months in advance. It's a little bit of a challenge, but we'll see how it works, right?
Yeah, well, that's for sure. Now, we have a question from one of our listeners. Do you do anything in the Treasury bond market?
We have looked at T-bonds in the past, Larry, and they have the virtue of being a highly liquid market. So we are interested in things that are liquid and tradable. But no, we currently are not tracking that market on a regular basis. So some years back, we did some work in that area, but began to focus more on the equities markets per se.
Okay, now we'll try one other, and that's the yellow metal. Do you do anything in the gold market?
We do, with our weekly newsletter, publish an updated gold forecast, and with that, essentially, we're looking at longer-term gold positions and tracking the phenomenon with that. Currently, we're on a buy signal. We've been on a buy signal since the 9th of April. At that point, gold was trading at about $1,740 for the metal, and currently we've seen a big move upward there. We also like to track the GLD, which is the S&P ETF with gold as a surrogate for that market rather than tracking the base metal per se. So right now we've got a signal in to sell when GLD hits a weekly close below 177.75. But we're trading well above that at this point, so we're feeling remain pretty bullish with gold at this point.
Okay, and I see you've got a free webinar coming up.
We do indeed. We're doing that a little later this week and encouraging folks to join us for that. You can go to bit.ly/trade-tweak. That's all lowercase, and that'll take you right to the registration page for the webinar. There's no charge for that. We're going to be talking about methods for jump-starting your trading results and improving trading performance by adding some of the astro trading dynamics to it. If you've not been using the astrological factors in your trading, this is a great way to get an introduction to how that works and the kinds of things that you can do starting right away to enhance your performance with your trading by introducing some of these factors to the mix.
Okay, that's really good. Well, listen, my friend, we would like to have you back again soon. So whenever you have something really important, which is all the time, please let us know and we'll have you. And no, you've done a great job.
No, it's always important, but if we can have fun too, that's what I like.
Amen to that. That's for sure. But if you'll let us know like you did the last time, this would be great because it helps us to get ready. We'll be watching these triple retrogrades. I frankly like Mercury retrograde as one of my favorite things because it's short term and I like shorter term things and they act so accurately when they do work. So that's
well, that Mercury retrograde phenomenon lasts about 3 weeks each time, so we can sometimes see a pretty strong coincidence with the move in the markets for a good swing trade with that setup.
Well, that's good. All right, Tim, thanks for joining us, my friend, and we will have you back on again soon, okay? And be safe down there, okay?
We'll do that. Thank you so much for the time together, Larry. You have a great week.
Tim, tell the folks how they can reach you if they need to.
Absolutely. Go to financialcyclesweekly.com is our flagship website. You'll find lots of information there. To send a personal email to me, go to tim@timbost.com, and that's my personal email address. Be glad to respond that way as well.
Okay, thank you for joining us, my friend, and be safe down there, okay?
Thanks. Appreciate it, Larry.
Okay,
have a great week.
You bet. Tim Bost, Financial Cycles Weekly. Boys and girls, we have a situation in the Treasury bond that if you're interested, this is the time to look. We're down here to the 61% retracement down here. And I think if you pay attention here at 79.15, that might be the last bit of support that you have, because if we get below 179, something is certainly wrong. That's for sure. All right, we'll take a little break. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, the answer to your question, Mark, is absolutely yes. So let's take a quick look here at the, hold on one second, I want to get this NASDAQ up because I think it's telling a nice picture that is something that we really should pay attention to, in my opinion. Here, we'll get it up here. We talked about this in the newsletter last week, and it was on Friday. We suggested that we were going to get a 382 retracement in the NASDAQ, and that's what we hit yesterday. You'll notice that it was an A, B, C, D formation. And what we do today, we rallied up exactly to the 61% retracement. This is when the S&P is making a new high at 3376, and the and the Dow Jones way above 28,000. So then today we went down and went a little below the 78% level, held it so far. But this is telling us that the leadership is changing, and that could change in a minute. You know, if we get above 11,200, this would certainly be wrong. But right now, it looks like that is what's happening in the markets, as we're seeing some change between the tech stocks. And believe me, there's so many people pumping tech stocks in the world. Even they're talking TikTok, Knock whatever they are. I mean, they're everywhere. So these are just patterns that we're looking at, folks. We need to pay attention to them, because when they work really well. And when they don't work, you know exactly what to do. And that's get the heck out of the way and look for the next train to come by. So that's a key thing to look at. Very important. We got a nice kickback from Mr. Bill Meridian this morning. He warned us about this Jupiter effect in gold. If you recall, he was on here just last week or so talking about the possibility of a big correction coming in gold, and I believe $180 an ounce would certainly qualify as a big correction. And we'll have Bill on next week. We're going to have our good friend and one of our favorite people. They're all favorite, but some are always favorite, and that is Shane Smolian will be our guest tomorrow, and we'll have him on, and so that will be a lot of fun to see. It's hard to believe, folks, but on Friday, my little grandson is going to be 20 years old. He's going to take a break from college. He was going to be off to Stanford, but he decided to take a year off to let this stuff clear up, and we'll see what's going on. Anyway, we'll see you all tomorrow, folks. Live every day in an attitude of gratitude, and may God bless.